Tax planning in respect of location and nature of business. Nivya MPM Government First Grade College, Karkala. Tax planning. Tax planning is an legal arrangement through which, without violating the provision of Income Tax Act, the measure for reducing tax liability by taking full advantage of all deductions, rebates, and reliefs provided under the Act are taken. Location of tax planning. First one, Section 10A, related with tax holiday for newly established undertaking in special economic zone. The deduction first year 100% of profit, next second year 50% of profit, next third year, the next third year the amount not exceeding 50% of the profit as it debited to the profit and loss account, year in respect of which the deduction is to be allowed and credited to reserve account. The deduction is first year 100% of profit and next year 50% of profit and third year is not exceeding 50% of the profit. Second one, Section 80IA, for setting up a new undertaking in any part of India for generation and distribution of infrastructure facility, that is roads, railways, electricity, water supply project, etc. The deduction is 100% of such profit or 30% of profit from such eligible business. It's set up in any part of India for the generation of or distribution of power. It is begins to generate power at time during the period beginning on first day of April 1993 and ending on 31st day of March 2010. The deduction is 100% of such profit or 30% of profit from the such eligible business. Third one, Section 80IB, the deduction in respect of profit of industrial undertaking located in backward state or district. The deduction is allowed either 100% and or 30% for 10 years depending upon case to case. Fourth one, Section 80IC, the profit from industrial undertaking located in the specified state. The states are Jammu and Kashmir, Himachal Pradesh, Uttaranchal, and Northeastern state. Deduction allowed is 100% of such profit. The specified states are Jammu and Kashmir, Himachal Pradesh, and Uttaranchal, and Northeastern state. Fifth one, Section 80IE, undertaking in Northeastern state begins during 1st April 2007 to 1st April 2017. The deduction is 100% of such profit for 10 consecutive assessment year. Sixth one, Section 80ID, for the business of operating and maintaining hospital in rural area. Deduction is 100% of such profit for 5 years. Seventh one, Section 80LA, schedule or any other bank incorporated outside India having banking units in SEZ. Second one, unit of an international financial services center in SEZ. Deduction is 100% of such income for assessment 5 assessment year and 50% of such income for next 5 assessment year. Being a scheduled bank or any other bank incorporated by or under the laws of a country outside India and having a banking unit in special economic zone, or being a unit of an international financial services. For the deduction is 100% of such income for 5 assessment year and 50% of such income for next 5-year assessment year. Nature of tax planning in business. First one, tea development account, coffee development account, and rubber development account, section 33AB. The assessment year 2021-22, the amount of deduction allowed is the lower of the following are sum equal to the amount or the aggregate of the amount deposited as per this section, or a sum of equal to 40% of the profit of such business. The deduction under this section shall not be admissible unless the account of such business of the SSC for the previous year relevant to the assessment year. Site Restoration Fund, Section 33ABA. The SS is carrying on business consisting of prospecting for or extraction or production of petroleum or natural gas, or both in the India and in relation to which the central government has entered into an agreement with such assets for such business. Before the end of the previous year, the SSC should deposited amount in SBI in the scheme approved by the Ministry of Petroleum and the Natural Gas of the Government of India. Third one, specified business eligible for deduction of capital expenditure, section 35 AD. And SSC shall, if is of, be allowed a deduction in respect of the whole of any expenditure of capital nature incurred wholly and exclusively for the purpose of any specified business carried on by him. Fourth one, amortization of certain preliminary expenses, section 35D. The deduction allowed amount equal to one-fifth of the following preliminary expenses for the 5 successive previous years. First one, preparation of feasibility report. Second one, preparation of project report. Conducting market survey or any other survey necessary for the business of the SS. The engineering service relating to the business of the SSC for the SSC. Fifth one, special reserve created by a financial corporation under section 36 first clause 8 in respect of any special reserve created and maintained by a specified entity amount not exceeding 20% of the profit derived from eligible business computed under the head profit and gain of business or profession. The specified entity amount not exceeding 20% of the profit. Before making any deduction under this clause carried to such reserve account. Thank you.